Firstly, I would like to give a big thanks to Peron, who probably came up with the idea of using PPTs in videos. Also, my exams are over, so I shall be able to create more videos from now on. Let's first look at the data. China's economy is experiencing a slowdown, not just in terms of GDP growth, which is expected to be 4.4% in 2022, but also in terms of key indicators. Industrial production fell by 7% in April compared to March. Retail sales are down by 14% compared to a year earlier, and the sale of new homes fell by 42%. There are many factors that have caused this slowdown, but the one that has had the most effect is the zero COVID policy. The employment situation in China is impossible to understand as the official unemployment figures are highly unreliable. However, China has created a new unemployment survey to gauge unemployment in its cities. These show that in 31 big cities, unemployment is at 6.7%. Overall unemployment was 6.1% in April, slightly below its peak of 6.2% in February 2020. This shows that even according to official data, China's zero COVID policy has resulted in its economy slowing down and its unemployment reaching levels only seen since the start of lockdowns in 2020. Let's first look at exports to try and figure out what is causing China's economic slowdown. In 2021, China's exports rose by 30%. This is what fueled China's recovery in 2021. However, as of April, exports are only 3.9% higher than a year earlier. Supply chains are very fragile, and small outbreaks in China trigger massive responses, resulting in supply chains getting clogged. However, while exports have slowed down, the trade surplus accounts for only 2% of China's GDP, and China's trade dependency is only slightly less than the UK's. The second and arguably least important factor causing China's economic slowdown is foreign investors. Foreign investors are fleeing China. The value of yuan dominated financial assets fell by $150 billion in the first quarter of 2022, and the Institute of International Finance forecasts that capital outflows will rise to $300 billion in 2022, up from $129 billion in 2021. This could be due to the relations between the West and China worsening, the Ukraine Russia war, or the unpredictable nature of the Chinese Communist Party. The reason I say this is the least important is that not only does the stock market not reflect the actual economy, but in China, the property market is king when it comes to investment. The third and arguably most important factor is China's property market. China's property firms have sold just $280 million in high yield dollar bonds as of May 2022, down from 15.6 billion during the same period last year. High yield dollar bonds are bonds that offer a higher interest rate as they have a lower credit rating than investment grade bonds. Land sales are crucial to the Chinese economy. They make up 43% of the revenue of state governments, and state governments are crucial to China's economy, acting as competitors in a bid to woo regional and foreign companies to set up shop in their state and increase GDP growth. In the past, credit was cheap and demand was essentially unlimited. This led to the largest building spree in human history. However, in a bid to control the property bubble, Xi Jinping has set the so called three red lines. These set a cap on developers' ratio of liability to assets, net debt to equity, and cash to short term debt. This has caused 12 developers to default on bonds since July 2021. This means that the supply of houses is going to fall and demand has to come down with it, which means the sale of houses must fall from 15 million a year to about 10 million. The reason this is the most important factor is that the property sector accounts for 25% of GDP. According to The Economist, there are three tasks that the CCP must fulfill to prevent the property market from crashing. First, it must reduce offshore defaults. Second, it must make sure firms continue to make houses and people continue to buy them. And lastly, it must create a long term plan to bring stability to the property market over the next decade. To sum everything up, China's economic slowdown has been caused by exports slowing down, foreign investment drying up, and the property sector facing troubles. There are ways to achieve the government's target of 5.5% GDP growth, for example, through infrastructure investment. But that is for another video. Thanks for watching Economics Matters and see you next video.